Traditionally, in the banking software industry, many providers are focusing just on a certain stage of a loan life cycle. So we could see loan origination solutions, we could see loan servicing solutions. TurnKey Lender took a different approach from the very beginning, building an end-to-end platform. So we were able to manage our customers' portfolios end-to-end, which allowed us to process and to analyze a lot of data. And that's how we were able to build a lot of intelligence on top of just automation. Because in order to build an efficient and working credit scoring models, you need to see a loan end-to-end, from the cradle to the grave. And in order to build an AI-based model, you need to process a lot of data, like hundreds of thousands and millions of data points. So we had this privilege because the majority of our customers were non-bank lenders, and they managed their entire portfolios on our platform. So we were able to monitor and analyze borrowers' behavior and the impact of different characteristics or borrowers' characteristics to the performance of loans and to the creditworthiness of these individuals. We use AI for loan application, which is gaining popularity, and many businesses started using AI for loan application processing. Why it's more advanced and provides better accuracy compared to traditional approaches, and definitely compared to a manual approach. AI is capable of detecting trends and patterns which are not visible by a human eye or cannot be detected by a human mind, but also they cannot be captured by statistical approaches. One of the examples would be a cluster analysis that we do for our customers. It's when instead of looking at the traditional credit scoring models and credit scorecards, AI analyzes individual characteristics of customers and can find that even though based on traditional approaches a certain customer looks good, based on some combination of these characteristics, they might represent a risk group. So again, we cannot determine that, we cannot detect that using traditional approaches. Only AI can find such dependencies and correlations. Another thing is that in addition to using traditional credit history and credit bureau reports for decision making, AI helps to incorporate more advanced and informative data sources like bank statement information and transactional data. Again, in order to analyze a lot of information, a lot of unstructured data, you need to use AI, which is able to do it in real time and which is able to provide quick decisions on the loan application.